Hey guys, how's it going? So look, I just spent a couple of days without power because PG&E turned off our power, saying that there was danger of wildfires, and a lot of people in the Bay Area have been going through this lately. Um, so let's see, went off Saturday afternoon or evening, and then we spent all day Sunday and part of the day yesterday without power. And when it came on yesterday, they were telling us, we may be turning it off again on Tuesday. Um, and so it's just crazy, the stuff that we've been going through. Um, and caught a lot of us by surprise. We didn't think that we'd have that happen again so soon. And now everybody's saying it could happen again any day because nobody's really comfortable that the utilities are doing a good job keeping on top of everything. Anyway, so I've got a couple people today tell me that they're thinking they might want to wait until tomorrow to lock in interest rates because they think the Fed might be dropping interest rates tomorrow and that may affect mortgages. Okay, so a couple things. Fed's going to drop rates tomorrow, guys, but that's not going to make a direct impact, or at least a big impact, on what mortgage rates that are available tomorrow. The market's already priced in the fact that the Fed's going to drop these interest rates. And let's face it, if for some reason they did not drop interest rates, then things actually would probably get worse because the markets are all expecting it. They've priced it in. And so it's basically a foregone conclusion as far as they're concerned. Now, when the Fed raises their rates, all that affects is the immediate day-to-day interest rates that banks are charging each other and that they pay to get money from the Fed. That's just the overnight rate, guys. When we're dealing with 30-year fixed rate mortgages, for example, which is our most popular product, those are long-term rates, and those are affected much more by other things that are going on in the economy. If you turn on the news tomorrow and they talk to you about how since the Fed dropped rates, here's what that would mean for you as far as a cheaper mortgage. Okay, here's a secret. You can never believe that person again on anything to do with your finances because they're just making it up. And I've seen it on major news broadcasts and things like that. Fed just dropped a 0.25% interest rate today. Here's what a 0.25% interest rate difference would mean for your mortgage. Well, it has nothing to do the one with the other. So when you see someone making that claim, or when you see hucksters that are trying to talk you into refinancing and they say, oh, you need to take a look at this because the Fed dropped rates today or yesterday or whenever, you know that they're just trying to blow smoke up your ass because the one doesn't necessarily affect the other directly. Sometimes things move a little bit. It's already priced in right now. It's not going to be a surprise. And so I don't expect big movements tomorrow. Now, yesterday we had the S&P 500 hit an all-time high. Today it closed just slightly lower. The strength of the economy has people kind of excited about what's going on. Here is the thing that the Fed's doing, and they're kind of doing it in secret. And it's going to have a bigger effect on your mortgage interest rates than this actual rate decision tomorrow. They started buying treasuries again. They put through about $65 billion in the last week or two. And they're saying it's not quantitative easing, but they're buying short-term treasuries. And part of the reason is, I've been talking to you guys about the inverted yield curve that we had hit us several times and how big of a problem that is and how big of an indicator that is that we're going into a recession. Well, they're buying treasuries with terms of less than a year. And the reason they're doing that is they're trying to steepen that yield curve up again in the way that they're trying to manipulate things. So far more important to you on a long-term analysis for your mortgage is what happens with the unemployment numbers and the jobs report that are coming out later in the week, and seeing what they end up doing as far as as far as what happens for more long-term movements in the market. Now, other big news that's going on, the European Central Bank just decided to leave their rates unchanged. Their rates are negative right now, guys. And that may be changing soon because the head of the ECB is now gone. Draghi's out, and the gal that replaced him doesn't believe in his same techniques when it comes to what they're going to do for monetary policy. So if they start raising their rates, that's going to likely cause our Fed to start raising their rates as well, and that will, in a combined concerted effort, start pushing things higher. And that's going to happen if they're worried that inflation is starting to creep in again. Anyhow, so again, they say, don't call it quantitative easing. It's not quantitative easing. It is $65 billion, though, that they paid on these short-term treasury securities. So I don't know, guys. We got some really interesting times ahead. I've given you several videos over the last couple months about why I think we're moving into recession sometime in the next year or two. The benefit to you is you probably have a lot of equity in your home. Another report that came out about a month ago from the Fed is that we got about $15 trillion in equity in our homes throughout the country here. And that's on a $26 trillion total asset value. So on average, people are sitting at about 30 to 35% loan to value on their home, which means you have a lot of equity that you can probably do something with. If you are carrying any other debt besides your mortgage for any reason, you should at least sit down and analyze what you could do by consolidating that into a new home mortgage and see if that would make sense to you. You don't have to do it, but you should at least ask yourself the question, sit down with your local expert and discuss it with them, because you may be able to do things that are going to make things a lot better for you in the long run on your finances. Anyhow, if you have anything in particular you'd like me to discuss on mortgages, on credit, other ideas, big announcement, I actually have a podcast that's going to be coming out here soon. We've recorded the first episode. Second episode is going to be recorded later this week, and it's going to drop sometime in the next week or two. We're in the process right now of doing the edits, and the podcast is going to have to do with financial services, mortgages, and all things entrepreneurial. Anyway, if there's anything you'd like me to discuss, please make a comment below or shoot me off a message. Thanks, guys, and have a great day.